recording. All right, so good morning and welcome to Trade with Dr. FX 1.0. Like I said, it's going to be two chapters. The first chapter is going to be bias, and the second chapter is going to be entry. Then, and we're going to be focusing on just three things: structure, liquidity, and key levels. Now, on the key levels, that's what we are going to be doing first. Then, secondly, we're going to talk about structure, and thirdly, we're going to talk about liquidity. When we come to structure, we're going to talk about different models. Okay, we're going to talk about structure, liquidity, and POI. We're going to talk about a lot of things: algo market structure, KLR, key level refinement, and so many things. So I will urge you guys to sit back, get your pen and paper, and don't miss any class. So don't feel like you know something and miss a class. Like I said, I know today morning class, a lot of people are not going to be here because it's too early, but this is my time. This is when I'm very active because I wake up to trade. So definitely I wake up to trade by this time, always. After prayers, I tend to pray. Okay. So we're going to be talking about key levels today. And what are key levels? Key levels are decision points in the market. Okay. Key levels are points where you make decision. It's not a point where you must take a trade. No, but they are decision points. Meaning, if the market comes to a certain point in the market, you tend to make what? Decision. Whether you're going to buy, whether you're going to sell. And one more thing, a reminder, my class is not beginner friendly. Okay. It's for advanced traders. Right. So key levels are decision points in the market. Like I give an example, there are 6 types of key levels, which I'm going to be focusing on and talking about. We have the support, we have the resistance, we have the QM, we have the open close, we have the SBPR, which is support break becomes resistance, and the resistance break becomes support. Now, let me talk about what a support is first. Like I explained, when you have an old man, look at his hands and look at his legs. If he's old, he's going to be having a walking stick like this to support him. This walking stick is acting as a third leg. He has 2 legs already, but this walking stick is acting as a third leg and it's supporting him to walk. So immediately you know that support is located below the chart, meaning support is low, right? And it's going to supporting the what? The old man. So support is going to be located what? Down. Yes. So now this is how support is going to look like on the marketplace. If you look at candlesticks, you're going to have a sell candle and a buy candle. And the wicks of the candle are none of your business. You're going to be marking the body of the candle where they exactly overlap. Where they meet the sell and the buy candle, then you're going to mark it below. So support is located below the chart. And if market comes to this particular place, we'll be expecting the market to tap and go up. Expecting. It doesn't always happen, right? It's what? Expectation. Now, secondly, if you come to the line chart, you're going to see it look like what? A V shape, right? So it's a V-shaped key level on the line chart. Now, why is the line chart very important? The line chart is very important regardless if you know it in the candlestick chart, because sometimes they're not going to be equal. This one and this one are not going to be equal. This one might decide to be this one might decide to be like this. And you need to go to the line chart and look at exactly where the overlapping is, exactly where the V is. You need to go to the line chart for you to see it's going to be here, right? So, but you need to know exactly how it looks on the line chart. So if the chart is not very clean and they are not overlapping how they are supposed to be, okay, you go to the line chart and yeah, you sort it out yourself. So it's going to be a V shape. Then secondly, we're going to be talking about what? Resistance. How does resistance look on the line chart? Resistance is a point in the marketplace. It's also a part of key level, meaning it's also a decision point. It doesn't mean when the market comes to resistance, you just sell or you just wait. No, no, no. What you first do is wait and see what you want to see before you take a trade, right? So resistance is basically an A-shaped key level on the line chart. It's going to look like an A, right? So if you go to the line chart, it will quickly look at like an A, and this is what how the resistance point look like, a buy candle and a sell candle. Then you mark the high of the buy candle. Now, that's how a resistance basically look. It's not like I'm wasting my time here. Then before I come back to the QM, I want to talk about the OCL. Now, the OCL, which is right here, is between two bearish candles or what? Between two bullish candles. Let's say there's a bullish candle. Then we have another bullish candle here. If between two bullish candles or between two bearish candles. Okay. Now, this is a bullish OCL I'm drawing, and the other one is what? It's a bearish OCL. So it also acts as support or resistance where we expect if the market comes. If you go to the line chart here, you're not going to see anything. But if you keep taking note, you see a little, very little bend. Very, very, very little bend. It will bend small, but it's very significant. So yeah, this is expected if the markets come to hold, right? It doesn't always hold. Even 50% of the time, it doesn't always hold. But how you use them, if you use them accurately, you really understand what I'm talking about, right? These are bullish, bearish OCL, and these are bullish OCL, right? Well, if the market come, we're expecting it to also what? Hold and push the market to the upside. Now, let's quickly go to the charts and let me show you all of these things. Um, this is the 4 hour time frame, so I'll just quickly show you. Now, there's what? There's a support zone below here. There's also a support zone. There's also another support zone. You can see it. There's a support zone. So all these are support zones. So if you go to the line chart, you're quickly going to see it as a what? V shape. Can you see V? Can you see here V? Can you see V and what? V. This is how a support look like. You can see all of them are bearish and bullish, bearish and bullish, bearish and bullish. And these two are high probability safe. So then we move to the bearish, right? The resistance. This is a resistance right here. You can see it at the top. There's a resistance. There's a resistance. It's at the top of the chart, right? These are resistance that failed here, right? Right? They're all resistance. All these are resistance, right? All these are what? Resistance. So basically, if you go to the line chart, you see it at A-shaped. You can see it all A-shaped. All these resistance are all what? A-shaped. Now, then the OCL, we have the bullish and the what? Bearish OCL. This is between a black candle and a black candle. You can see it is coming down. So it's a bearish what? OCL. But this is between a bullish candle and a bullish candle. This one. So it's what? It's a bullish OCL. So we have a lot of them. Bearish. This is just identifying key levels, right? Bearish OCL, and these are the bullish OCLs. This one's here. Bullish OCL. And this one is a what? It's a support. This one is a support. So now, um, these are bullish and bearish OCLs. Then nextly we move to SBBR and IBBS. Before I come to QM, now what is SBBR? Now I would use this for explanation. I want you to pay close attention. Now I'll use this for explanation. This is a support, right? This is support. Now, as this support is now, what can happen is the market can come down and close below this, because we were expecting this to hold, but then the market came down and the market did like this. If the body of a candle closed below the line you just drew, if the body of a candle closed below the line you just drew, then you'll be expecting the market to come back to this zone either immediately or later, or in next week, next month, anyhow. Then this support, if the immediately the candle of the body of a candle closed below it, it has been broken, right? So that's why the name is support break, SB. Then the BR becomes what? resistance. So the market is now coming back to use it what as what resistance, something like this. If a support got broken, the market comes back to use it as a resistance with candle body. Don't forget, it's what with candle body. With candle body, right? The same thing. This is what we call support break becomes resistance. The same thing now. If you come to your resistance, this A-shaped key level. Now, meaning on this line chart, how is it going to look like? This one is going to look like the market breaks it, right? Like this, and then the market is going to come back to the line and drop on this word V-shaped key level like this. This is how it's going to look like, right? The market will break it like this and come back because on the line chart, wicks are not recorded. There's no wick on the line chart. That's why it's very interesting. And wick about liquidity. If wick were important, we won't be waiting for the market to take them out, right? We'll be using them to enter if they are important, but they are not important. That's why they are used as liquidity. The market always targets them, right? So the same thing goes to this. If the body of a candle, rather than respecting it, close above it with a bullish candle, then we'll be expecting the market to come back into this and then use it as what? Sorry, and use it as what? The candle to come back like this, use it and what? Push up. So this one is now what? A resistance break becomes support. This one is a support break becomes resistance. So let me quickly show you how it looks on charts if you can find ones very easy. Okay, now look at one here. Look at the chart now. Look at the chart. This is support, right? This is a resistance. Sorry, this is a resistance. So you can see this candle came in and broke it. Look at the way the market damaged this resistance. After damaging the resistance, look at the way the next candle came back and trade into it, right? The next candle came back and trade into it and started going up. So this is what we call resistance break becomes what? Support. Now, this one also has been broken, but it has not been used yet. So wait for the market to come back and see whether it's going to use it or not. So this is also a support right here that got broken by this black candle right here. You can see it, right? Now, this is also a resistance here that got broken by this white candle. And this one is high probability. When we go into learning, deep into learning, you understand why some are high probability and why some are what? Low probability. All right. This one is also a support here that got broken. You can see it. I'm sorry, a resistance that got broken. This one is also a resistance that got broken. This one here is a support that got what? Broken. So all this one is what? A support that got broken. Let's look at how the market uses it in the future. You can see that's why I say the market can come back now or anytime in the what? Future. Look at this one, right? This one is a support that got broken. Look at this one. This one is a support that got broken. So this is a support that got broken. This is a resistance right here that got broken right here. So you can see them a lot, right? Support that got broken, resistance that got broken, OCL, then support zones and resistance zone. I know you guys have understood this once. So now we move to QMR, right? We move to QMR quickly. We move to QMR. Now, what is Quasimodo? What is QM? What is left shoulder? Now, people believe that left shoulder is one of the strongest key level, but from my experiment and from my understanding and from my teaching and from my trading, my professionalism in trading and using my concept for like a lot of time, I feel like RBBS and SBBR are the best and strongest form of key levels for me. The best, not just the best, the strongest form of key levels. As we go, I will tell you why they are the best and the strongest, right? Now, we have SBBR, we have RBBS, then let's talk about the QML. Now, a QM is when an SBBL failed twice, or an SBBL failed. Yes, when an SBBL failed. Now, what do I mean? If you pay close attention, is okay, this is now a support. This is a resistance. After this is not just a resistance, it failed. After it failed, let me just delete one or two things. It's an A-shaped key level before. It failed. We are supposed to use it as what? SPPR or RBPS. It now what again? It now failed again to the downside. You can see, meaning we can either say a support, a resistance that failed twice, right? Or we can call it what? An RBPS that failed once. It's one of the two, definitely. Was a support. It failed to the upside and it failed to the downside, right? It failed to the upside and it failed to the downside. So then we're going to see it as a left shoulder. Like I said, the line chart doesn't record wicks. So when you go to the line chart, exactly what you're going to see, please. Noise. Mute yourself, please. Immediately you come in, mute yourself. People want to hear. So this is it now. We have a resistance. The market closed above it, closed below it. Then this one becomes what? A bearish QM because it failed twice. It's either a resistance that failed twice, or you can call it an RBBS that failed once. So anyone you want to call it. So if you go to the line chart, what you're going to see is something like this. So this is how it's going to look like. This is the left shoulder here. You can see that the market closed above this. This is an A-shaped key level, right? This is a resistance. The market closed above, closed below. Then we'll be expecting the market to come and use this left shoulder to what? Sell. Now this is what we call left shoulder, like this, for bearish scenario. Then for bullish scenario, the same thing. The market is still going to come. Market is still going to come right here. Close. The market has closed below. Then the market is going to close above again. The market is going to come and close above. Now, when the market comes and close above, it's going to be a green candle. After the market comes and close above, then we use this to what? To buy, right? It's going to be how. Now, pay attention to this zone. I drew it on the line chart already. Then it's not going to look like this anymore. What will happen is the market is going to close below. The market is going to close above, right? Then this is going to be the left shoulder, this zone still. Then the market is going to use this zone to buy. This is how it's going to look like. Okay, this is what we call left shoulder. So let's quickly go to the chart if we can easily identify it. Now I've seen one already. This is a left shoulder. This one right here. This one is a left shoulder. Look at the way the market came, broke it here in this black candle, break it above with this white candle, and then the market will be expecting the market to come. So it's a left shoulder. If you go to the line chart, what are you going to see? You're going to see something like this. The market is going to break it down, break it up. Then what? This is going to be what? Our left shoulder. And mind you, if we go into the chart and you're interested in trading left shoulders, if we go deep into learning, you're going to make a lot of profit. And I'll tell you why, and I'll tell you which pair. So can you see it? Exactly what I drew. Can you see the left shoulder here? Look at the V. Look at the V-shaped key level that got disrespected twice. 1, 2. Then we'll be expecting the market to come down. Right? This is what we call what? Left shoulder QM. Correct. Let's see. This is another left shoulder for buys. Okay. This is now a left shoulder for sell. Right here. This one. How does this one look on the line chart? It's going to look like this, like this, like this, and then the drop. Then this is going to be what? Your left shoulder, because it's a resistance that got disrespected what? Twice. It's an A-shaped key level here. There you got disrespected once, disrespected what? Twice. Look at it. Can you see? So this is how a left shoulder looks like. So basically, this is also another left shoulder. This bearish left shoulder, right? There's a bullish left shoulder. Can see a lot of them everywhere. Can see a lot of them. Yeah. I think there's a left shoulder. Yeah, it is. You can see it. The market closed above, closed below this candle. The market came back into that left shoulder. Look. Then the market trade down. Now, basically, what we just did is identifying key levels, right? So anybody can come into the chart and identify all the type of key levels I just identified. The support, the resistance, the QM, the OCL, the RBBS, and what? The SBBR. Okay, so These are just identifying what key levels. Now, next, we are going to be talking about respect and disrespect. How do you know a key level has been respected or it has been disrespected or it has been broken? First of all, then secondly, we'll talk about fresh and unfresh key levels. Then we talk about what happens if a key level get disrespected, right? Then that's going to be all for key levels because I'm not here to sleep on key levels. Then next, we jump into storylines and bias. And we talk about storyline and we talk about the three type of bias, right? So now, well, how do we know a key level has been respected? Let's delete a couple of things and use simple example. Let's say we have a key level and we're expecting the market to trade into that key level. Now, if you have a key level marked out and you're expecting the market to trade into that key level, how do you know that key level has been respected? Now, let's say we have this support right here. Now, the first thing why I love key level is because it teaches you patience. It teaches you patience. If you're not patient enough, if you want to do it the right way, you must wait. That's the sad truth. As far as as far as as far as you're doing it the right way, as far as you're doing it the right way, you must wait. That's it. So now, if the next candle came here and then respected the line, that is, touches this your line, and then closed like this above the line, then would say this key level has been what? Respected. Remember, if we have this V-shaped key level, the market came into any key level you're expecting to tap. It can be this, it can be this. Then if it's for the sell scenario, then it's going to be something like this. The market will tap, give us a wick, and the market is going to close what? Below. It's going to be red. If the market at all does anything like this and close above your line, then this is what has been respected. This one also has been what? Respected. But if at all the body of a candle, remember, comes and close below this line, if at all the body of a candle close below this line, then this has been what? Broken. Then you cannot use it to buy anymore. It is telling you that you are now bearish. You are supposed to use it to what? To sell. You're going to wait for the market to come back into that same key level. Then you sell from here. You're not using it to buy anymore. Then immediately after the break, this has become what? A support break becomes resistance. Okay, the same thing. That's why if you want to have the best buyers, what I used to say, it's not always that you need to have a daily reject, daily forward break. It's not almost that you need to have CRT. Sometimes all you need is a candle closure. We'll talk about that bias. It's type 4. Calm down. We'll get there. All you need is how to see how the candle close for you to look for continuation KLR A plus setup for you to get one of the best entries and continue to the direction. Right? So the same thing goes to this. If the market at all close above this OCL like this, then it has been what? Disrespected. And you'll be expecting the market to come back into this OCL again. So this OCL2 can act as a support break becomes what? Resistance. Sorry, this is a resistance break becomes support. And then you push up with the OCL, right? So let's go into the chart and I'm talking about respect and broken. Now, immediately you look at, for example, this key level. Was it respected or broken? It was respected. Why? Because the market touch it, give us a week and continue work. This one, was it respected or broken? This is a resistance, right? White candle and black candle is a resistance. It got broken by this candle and this candle came back into it, even though this one was the one that was used. But then this one was also respected because the week of candle was closed above. No matter how long this week is, as far as it's closed above, these zones were what? Were respected. Okay? So, but then look at something like this. Look at the way the body of a candle closed below this what? Support. Then this one has been what? Broken. We'll be expecting the market to use it as what? Resistance. But when the market came back again, did the market use it as resistance? No. The market also destroyed it, right? After destroying it, then this one is now what? A QM. You'll be using it as a QM, right? The same thing, pay attention. Was this zone respected this OCL? Yes, look at the way the candle come and wicked and then went down. Now, but let's look at something here. This place that was some sort of consolidation. Was this zone respected? Yes, this is an A-shaped key. This is a V-shaped key level, which is a support. The market rejected. Look at where the candle closed, and you know that okay, this is where the candle closed. You should know that okay, you're bullish because this one was what respected, right? Now, respect is when the market wicks and rejects. Break is when the market closes above, right? That's when you know it has been broken. Now, for example, this one also is an A-shaped key level. It was respected, right? But what of this one? Look at look at this one. Let me zoom in. Look at this one. This is a V-shaped key level, which is a support. Was it respected? No, because the body of these two candle closed was below. So now, for me to take a trade easily, how I can do for me personally is this is a break and this is a resistance. If the market is going to break this and this one is still fresh, then I know that this is where I'm going to be selling from. Confirm, right? Now, this one also, was it respected or broken? It was broken, right? So you should just know the difference between respect and broken. So some are respected, some are broken. You should know. If they are broken, you should anticipate the continuation of the move towards that direction, right? If they are respected, then you should expect what there might be a reversal if you've checked your certain confirmations. This is respect and broken. Now, next we're going to be talking about fresh and unfresh key levels. Fresh and unfresh. Now, what are fresh and unfresh key levels? Fresh key levels are key levels that has not been used yet. Why unfresh key levels are key levels that has been what used. Fresh key levels are key levels that has not been used yet. Why unfresh key levels are unfresh key levels that has been used. For example, now I'll give you something very interesting, but pay attention. Now, this key level fresh? No. Is this key level fresh? Yes. Why? This one has been used. It's on fresh. So we don't expect this to hold again. Okay? We don't expect this to hold again on this time frame. But you can see sometimes you see the remaining part of it held. Why? Because if you go to another time frame, there is what? There is a 1 hour key level or something. Then this one will be acting as inducement. So let's not go into that yet. So that's why you see the remaining of it hold. But this is an on fresh key level. But this one is fresh because the market has not come into it yet. Right? So what is this? This is a fresh key level. This is what? But this one is an unfresh key level because the market has used it. Just now, the market used that particular key level, right? So you see them a lot. There are fresh key levels, there are unfresh key levels. And unfresh key levels are not expected to be used again, right? This one's here, this one here is not fresh, right? Market has used it. But then this this one is not fresh. This one is what? Fresh. This one is what? Fresh. So that's why when we come to storyline, probably late our next class today, or we might leave it to next week, it's just the market moving from fresh key levels to what? To fresh key levels. From fresh key level has been mitigated, so we don't worry ourselves about them, right? Okay. So this one is this one fresh? This one is fresh. The market has not used it yet. Okay. So we have a lot of them. This one is fresh. This one is a resistance break. It has not become supported. Is this one fresh? This one is not fresh. The market has used it already right here. Okay. So you see a lot of them. Is this one oops, this one is not fresh. The market has already broken itself when it was coming down. This one is not fresh also. It has been broken. And we have this one is not fresh. Sorry, not this one. This one is not fresh, and a lot of them, right? So, but we have other fresh ones too that has not been used yet in the market. We have this one, which is very fresh. We have this one, which is very fresh. We have this one, which is very fresh. This one right here, and a lot of them. They are very fresh. So these are fresh key levels that we expect the market to use. But all these unfresh ones, we don't expect the market to use them again because they have been used what before. So basically, this is identifying key levels, and you know whether the market has respected them or whether the market has broken them, and also you know whether they are fresh or they are what unfresh. So but for RBBS and SBBR. Whether a key level has been used before, for example, listen, this key level, this is a resistance, but it has been used before. The market came into it once and two times, but the market respected it that two times. Immediately, this candle closed above it. This is a support, but it has been used, it is a resistance that has been used twice. But immediately, this candle closed above it, then this zone is now fresh again. It can be used. And this zone, this touch that the market touched twice before, is making it higher probability. It's not reducing the probability, it's making it what? Higher probability. And then that's why I love RBBS and SBBR. I've already mentioned it. Those are my favorites, right? I can ignore anything, but RBBS and SBBR. You want to pass a platform account, you want to make 10, oh, doctor, you're making 10K, 5K dollars. I know what I'm focusing on. I know what gives me the money. And I'm here to share it with you guys, right? So basically, this one has been used. You can see the tap one here, two here. Then immediately this candle close, it is fresh again to be used as what? RBBS. It's a resistance that got used, but it's okay. Immediately after the break, it is fresh again. Then the market can come and buy, right? Market can come back into it and what? And buy. So that's how RBBS work. So even QM, if QM has been used once, twice, three times, immediately it got disrespected twice, it can be used again. It is fresh, very fresh. We say it is what? Fresh again, right? We say it's fresh again. That's how RBBS and SPPR works. So look at this one now. Look at this one. Look at this. Beautiful, accurate. I didn't even see of this one. Now look at this. There's a sub resistance. It got used once and twice, but immediately this candle close above, it is now what? Fresh again. You can use it confidently. Immediately this candle close above. Then look at what happened. Why did this happen? Actually, when we go into, you understand inducement, and then boom, this one need to hold. It's even a complete trade because I'm using the 4 hour time frame to show you guys things. I'm not using the daily. When we go to storyline and bias, then purely I will focus on what? The daily chart, right? I'll focus on the daily chart. So immediately a candle close above a support or a resistance, regardless of whether it has been used or not, it becomes what? Fresh again. You can use it. QM that has been tested multiple times also, if it has been broken twice, then it is one what? Fresh again. And what? You can use it. You can what? Confidently. You can confidently use it. Then also, any key level that get disrespected, we expect it to act as support or resistance. As a support break becomes resistance, or a resistance break becomes support, even if it is a what? An open close. If an open close get disrespected, where can I find one? If an open close get disrespected, we expect the market to also come back into it. Okay, we also expect the market to come back into it if an open close gets disrespected, just like this one. If the market decide not to go bullish and the market decides to, like, okay, let me drop down like this and then give us a red candle, then this one is also going to be acting as what? As resistance. We'll be expecting the market. The next candle can come back, and also sometime in the future it can also come back. The next candle can decide to come back like this, open bullish like this. When it opens bullish, it comes into this. Then it now create a wick and then drop down. Then what did the market do? The market has respected it like this. Okay, even an open close can be an SBBR or what? RBBS. So I think talking about identification and understanding key levels, I've done justice to everything. Talking about the fresh key levels, the unfresh key levels, talking about how the fresh key levels look like and all the unfresh key level look like, telling you that unfresh key level cannot be used again. Fresh key levels are the ones we are going to be paying attention to, telling you how to identify all key levels. Now, our next class is going to be talking about how to use them. Now, how to use them, which is basically next class, I'm going to be focusing on storyline and bias, right? Storyline and bias. Then then we're going to talk about how to from them, like how do you know this one is going to hold or this one is not going to hold or this one is the one you're going to be paying attention to. So we have 3 minutes left for anybody that have a question to ask this question. Anybody that has a question should ask his or her question. Anybody that have a question should ask his or her question. You guys don't have question? Okay,
Hello, can you hear me?
I can hear you, sir.
So I entered the class very late because our timeline is very different.
Yeah, it is.
I'm ahead with almost 2 hours. So is the recorded available for someone to download?
Yeah. It's available.
Okay, thank you.
Okay. So if there is no question, let's talk about if are you guys comfortable to go with another class now, or we should let the class till next week, Friday.
I have a question. Just one question.
Okay. Okay.
Okay, you said something like you said on fresh key levels are not expected to be used again, right?
Yes.
Okay, is there any case that it can be used again or it cannot be used again? Because I see sometimes that price can respect a particular place that's very disrespected. That is an on fresh key level basically, and then it's respected and play. So
And on
somebody
fresh key
step.
level, and on fresh key level remains on fresh. And on fresh key level remains on fresh. Except if it has been broken, then it becomes fresh again. Remember what I just said. If that key level
Okay.
is not broken, it's forever on fresh as far as it has been used, right? For example, now this one I used to explain quickly 1 minute before the live end. Now this key level has been used once, twice. This is the second one that came into it. Now, if you pay attention to this move up here, there's a key level on the 1 hour, on the 4 hour that the market came on the 1 hour, basically, or the 30 minute market make this one to push up. You see, but on the 4 hour, it's respecting it. Now, immediately this white candle close above, then this key level is now fresh again. It is making it this tap that was used, it was a resistance before that was used before that broke. These taps here is making this RBBS become higher probability for the market to come and use it confidently. Okay, but as far as it's a support, it cannot be used as a support again. It can only be used as a resistance if it has been broken. Do you understand?
Okay, now I understand. I understand
All
that.
right, yeah. So for if we're going for another class, we take a 10 minutes break, then I send another link. Okay, we're going for another class, 10 minutes break, then I send another link. So everybody go
Sir,
for it.
not to get class too.
What did you say?
Not to